Good afternoon. You're watching On Point. Asian markets ended today's session in positive territory. They're seemingly still enthused by the possibility of coronavirus vaccines being available sooner than previously expected. Japanese equities led the charge, with the Nikkei share index rising by 0.9%. Hong Kong markets were also ending in a positive territory, the Hang Seng index closing up 0.56%. Over in mainland China, the Shanghai Composite Index increased by 0.22%. In the United States, the S&P 500 index and the Dow Industrial Average pulled back from all-time closing highs as mounting U.S. layoffs in the wake of new mandated lockdowns to contain surging COVID-19 infections dampened investor risk appetite. Pandemic-resilient tech and tech-adjacent market leaders helped to keep the Nasdaq afloat. The Dow Jones Industrial Average fell by 0.58%. The S&P 500 lost 0.16%, and the Nasdaq Composite added basically 0.5%. All right, European markets are currently trading in negative territory. The local market is currently trading in positive territory, with the gold counters up over 3%, while other sectors are looking somewhat pedestrian for now. Let's take a look at the indicators. Well, for more on the markets, I'm joined by Chantal Marx. She's the head of research at FNB Wealth and Investment. Thanks very much for joining us, Chantal. We're hearing about an increase in the jobless claims in the United States. Of course, coronavirus playing havoc over in the United States. To what extent is the market taking that into cognizance?
So, I mean, when I look at the rand, it does seem as if there is a slight kind of risk-off sentiment. But when you look at actual equity markets, they're still moving up quite steadily. And as you rightly said earlier, news that these COVID-19 vaccines could come out earlier rather than later, really driving markets upward. But the move in emerging market currencies is telling me that they're moving upward, but more tentatively so than a few days ago. Because ultimately, in the US, if that economy has to be locked down or certain areas of the economy has to slow down in order to limit the spread of COVID-19, which it has been doing rapidly in the US, and it's been spreading rapidly in the US, then you can expect the economic growth story to take longer to unfold. And that brings a lot of risk into the system.
Yeah, we're also hearing similar stories in Europe, of course, where apparently the ECB, the European Central Bank, did warn that banks would need to make further write-downs on bad loans because obviously the economy there has also been disrupted.
Yeah, absolutely. I mean, the US is the country with the largest number of COVID-19 cases, but Europe is the region with the most COVID-19 cases. And these are active COVID-19 cases. So it's ongoing and it's an issue on the ground now. And I think the ECB is right to be concerned, because if you are going to see a slowdown in economic activity, it might place pressure on incomes, which ultimately results in people not being able to pay back their loans. So I think that it's probably prudent for these banks to increase their provisions just in case the situation worsens even further. But I think these banks are relatively well capitalized, and I know that the ECB also said that they're comfortable for them to start paying dividends again soon. Yeah,
it does seem as though the gold bears had already prepared the coffin for gold, you know, once it went below $1,800 an ounce. But it does look as though it has the potential to start rising again.
Yeah, absolutely. I mean, gold is a funny commodity because it's so sentiment driven and it's so risk driven. So you never should buy a coffin for gold, and you also shouldn't let gold into the narrow path to heaven, because ultimately when risk subsides, gold goes back to kind of cost levels, or the cost of production, which is closer to $1,000 $1,100, $1,200 an ounce. But in periods of uncertainty, gold prices go up significantly. And because we're still in a period of uncertainty, I won't write off the metal just yet.
Yeah. What do you think about the price of oil? Is still hanging on there around the $47, $48 a barrel level, but could it flirt with 50?
Yes, absolutely. I think that the oil price could go even higher. You might see short-term volatility due to the fact that there's still uncertainty around lockdown regulations and people moving around. But there also seems to be an issue on the supply side, which is pushing oil prices higher. So production was cut quite significantly in response to COVID-19. And it seems as if OPEC, which are the group of countries who decide on what level of production to peg oil at, they've actually decided that they're probably only going to start thinking about increasing production levels in January, which means that market tightens and the oil price goes up.
Let's take a quick look at Mr. Price. They came out with their half-year results, reporting that their profits were down 24%. Of course, like other retailers, they will have been affected by the lockdown in the earlier part of the year.
Yes, they were heavily affected because they weren't trading for all of April, and they had very limited trading in May and June. So to have a 24% drop in earnings is actually quite decent if you consider that revenue or sales moved backwards, but costs remained more or less the same. So overall, a pretty good result for them. They also actually managed to increase their gross profit, which is remarkable in a period as we have currently, particularly because they're hanging on to a lot of, they should be hanging on to a lot of excess inventory because people weren't buying anything in April and May. But they managed to bring down their inventory levels and their gross profit margin expanded. So there's a lot to be positive about. I also really like my initial thoughts around this Power Fashions acquisition are that it's quite good for them, and it's a really nice fit, and they are going to be competing with Pep Ackermans and Jet, which is a really good thing, I think.
Excellent. Well, my director's telling me we've got 1 minute. Your quick thoughts on Stefanuti stocks?
Yeah, Shav, I feel quite sorry for Stefanuti stocks. I mean, they were in the midst of a restructuring when COVID hit, but they've managed to narrow their losses, even though revenue came down quite sharply. But they're continuing with a big restructuring of their balance sheet. They did manage to put out these results as a going concern, but still a lot of uncertainty in that space, and they could really use this much talked about infrastructure boom right about now.
I'm sure all the construction counters could do with that. Thank you so much, Chantal, for your time. Chantal Marx, she's the head of research at FNB Wealth and Investments. My colleagues will have more news for you after a short break, and I'll be back at the top of the hour, 2 o'clock. Do stay tuned.